Hey everyone, it's Renee Hoos with Spire Mortgage Team with your November monthly update. Well, October was definitely another wild month in real estate. We had mortgage changes announced, so we're going to talk a little bit about being able to refinance up to 90% of the value of your home to add a secondary suite. We had some immigration policy changes announced, so we're going to talk about what that looks like for Canada in the coming years. And we also had some violent swings on our bond yields in Canada and in the United States. So 5-year Canadian bond yields, 10-year Treasury yields, just on the back of strong economic data in the US. So we've seen fixed rate mortgages bounce around a little bit. Top that off with a 50 basis point decrease by the Government of Canada this month. It's really been another wild month in mortgages. So let's dive into it. First of all, on October 8th, the Government of Canada announced that they are going to start allowing refinances up to 90% of the value of your home if, and only if, you are planning to add a secondary suite. So for us in Alberta, this is really cool news. We have a lot of properties that have increased 20% over the last few years in Alberta. So even if you purchased your home with just 5% down, there's a chance that you might be able to refinance up to 90% of the current appraised value of your home to add a secondary suite to your property. This is the best investment you can make. When you think about adding a secondary suite to your home, that investment might be between $45,000 and $65,000. That secondary suite is likely to earn you at least $1,200 to $1,500, maybe even $1,800 a month in rental income. So the return on your investment is huge. We can start submitting these applications on January 15th. So if you're sitting on a home that you own and maybe you haven't finished your basement, or maybe you have a basement that, bodes well for a secondary suite, it already has a separate entrance, reach out to us. We'd love to start helping you position that deal so that we can get it submitted in early January and you can look to get a contractor into your property and maybe even start earning some rental income in the spring. If you'd like to learn more about that program, we've got the link below in the YouTube notes, so make sure that you click on it and read a little bit more about it. Also, book a call with our team anytime. Happy to chat it through. On October 24th, Trudeau announced some very dramatic changes to immigration policy. He announced that the Canadian government is looking to decrease the number of non-permanent residents in our population from the current 7.3% to 5%. There were 4 measures designed to achieve this target. They're capping the number of international students and including a further reduction to the number of international students that can come in 2025. The post-graduation work permit program is also going to be tightened. The temporary foreign worker program is actually going to put a cap on what employers can bring in for foreign workers and increase the minimum wage required to be paid to foreign workers. And they are going to limit the work permits for spouses of temporary residents. Overall, this is likely to result in negative population growth in Canada between the years of 2025 and 2027. Take a look at this annual population growth chart. We're actually looking at a net reduction in Canadians' population growth. I think this announcement was fairly dramatic and it shouldn't be taken lightly. If this happens, I'm a little bit nervous about this reduction in population growth in Canada combined with the net rental housing supply that is being added to the market every year. Take a look at these graphs. You can see that we have massive numbers of purpose-built rentals under construction, particularly in BC, Atlantic Canada, and Alberta. Overall, there are a number of units that are going to come online in the next couple of years. One of the reasons that we've seen such a dramatic increase in rents is because we've seen so much in-migration. When we take away that in-migration, but we actually add supply, we may see a fairly significant softening in rents that you can achieve on a rental property. This isn't something to worry about, but it is something to be aware of. If your rental purchase only works if you're getting $3,000 a month on that unit, it may not be a great purchase right now. We want to be using conservative and realistic numbers for rents, knowing that we might be coming into a time where rents are softening just a little bit across the country. It's a wild time in the States right now. Let's be honest. I'm not sure about the credibility of a lot of the data that we're getting out of the States right now either. They've had huge employment gains. Their unemployment continues to be very low. And I do worry that some of these numbers are inflated. But on the back of this positive economic data, the 10-year Treasury yield has really taken off. So we've seen an increase in this 10-year Treasury yield from approximately 3.6 right up to 4.35. So, a 75 basis point increase in that Treasury yield. That's really what affects fixed rate mortgages. On the back of this, we see the Canadian economy also taking off. We can see that over the last 3 months, we had seen quite a softening in September of that bond yield, and we saw fixed rate mortgages come down, but we have seen a dramatic increase throughout the month of October, and it's really held strong in the back end of October, right around 3%. The Bank of Canada came out, and on our true economic data and our real numbers, they decided to decrease the overnight lending rate by 50 basis points this month. That tells me that they are worried about what's to come, and they are worried about the Canadian economy in the long run. There's a lot of speculation right now about what's going to happen at the next announcements later this year and into early 2025. Currently, we still have similar 5-year fixed mortgage rates between 4 and 4.5, and variable rates now are trading closer to 5%. That's because bank prime is now 5.95%, and variable rates are still trading around prime minus 1%. So again, variable rates trading around 5% and fixed rates trading between 4 and 4.5%, depending on your down payment and the property type and that sort of thing. We are starting to see, again, a lot of analysts report that 4% may be the bottom on fixed rates. So if your deal allows you the opportunity to consider a mortgage right around that 4% level, I do think that it's important to be having that conversation. Is this a long-term property for me? Would I like to take the lower payment, that burden hand on the front end, and take a fixed rate mortgage versus being in a variable rate mortgage and taking that risk as we move into 2025 that rates maybe don't drop as quickly as we think. Overall, I do think both strategies are very viable in today's market. They're likely to end up pretty close to the same cost in the long run, but definitely each person's individual situation might call for something different. Maybe a bit more flexibility with that variable rate mortgage, or maybe a bit more certainty with that fixed rate mortgage. And I think both arguments can be made. So if you're making that choice, don't feel pressured one way or the other way right now. Certainly get in front of a broker, probably me, that would be great, and have a little chat about what maybe makes the best sense for your specific situation. A couple of weeks ago, we had one of my favorite analysts, Ben Rabideau, talk to us a little bit about what he thinks is going to go on long term in the Canadian market. I've actually added the link to that YouTube video here for our subscribers and clients because I really think that it's important that you guys understand that this is a really great source of information. And it's important to hear somebody else's voice, not just mine, talking about what they think might happen in Canadian real estate and specifically in Albertan real estate. If you'd like to click that link, it's free for you to check out. If you have any questions about it or want to flesh it out a little bit more, please reach out to our team. We'd certainly love to chat with you anytime. In the meantime, that's all we've got for now. We'll see you with our December update in a month.